One of the things I love about the growing school community, and frankly was a goal, desire of mine since day one, is we would start to attract more and more go-givers. We would start to attract people that have experience that I frankly do not have. That has been my vision for one rental at a time. Always is, hey, share my story, but be a magnet for other go-givers and doers and folks that I build relationships with and then become know, trust, and respect. One of those experiences that I do not have is out of state investing. Now, I am out of area, out of market, but certainly not out of state. And I'm certainly not in Hawaii investing on the East Coast in Pittsburgh. My man, Marc, financial firefighter, is that guy. Marc, how you doing, buddy?
Good morning. Thanks for having me.
It's early for you, right? Is it like 6 a.m. for you?
It is 6 a.m. Yes, and I finished working out, and yeah,
Oh,
usually I'm
you are up
yeah,
early, my friend.
yeah, yes.
Oh man. So the folks in schools, first off, you're a very big contributor. Thank you very much for that. I think you're in first place on the whole, I don't know, gamification of school. That means you're contributing, asking questions, comments. So again, thank you. But if somebody hasn't met Marc before, tell us who you are, what you do, a little bit about your journey, and then we'll get into out of state.
Sure. Yeah, good morning, everyone. Yeah, I'm a full-time firefighter in Honolulu, Hawaii, so about 17 years in the firehouse. I am a realtor with currently Remax of Honolulu. I am looking to switch over to EXP and can kind of touch about that later if you want. And I have 14 single family homes in, like Zuber mentioned, roughly on the East Coast or Pittsburgh, Pennsylvania. So I think it's roughly about 6,000 miles away from
Oh,
Honolulu,
only
Hawaii.
6,000.
Yeah. And I also have my primary residence in Hawaii, and I also have a small single tenant commercial space in Hawaii. But I've had real estate since 2009, but never really considered myself an investor, or I guess you would say a traditional landlord, till maybe 2019 or so. I mean, I started with a condo, moved my way up to a single family home. Fortunately, was able to keep the condo. But yeah, I never thought of myself as an investor, and things happened around 2019, and my life changed a lot, and I looked at things a lot differently and how risky I was being, even though I had a pension. I have a pension
Right.
set up, and I really looked at it as having one stream of income was being fairly risky on my part.
Well, let's poke at that a little bit because I think there's a lot of people out there. So if we go back to 2019, rough math says you would have been about 14 years in the firehouse. And I understand this, but might be wrong. Kind of 20 years is the magic number. Is 20 years the magic
So
number for
the
pension and all of that?
Yeah, it keeps changing. So that's
Oh,
that's another reason why I'm trying to, share my message, because like the newer guys coming in, their pension is not the same as mine,
oh, okay.
and mine is slightly different than people that came in before me. So roughly, well, 10 years would kind of be that baseline where you want to get to because you're somewhat vested.
Okay.
Then 15 years comes into play for some medical reasons that you can get up to 75% medical when you
Okay.
retire. But then 25 is kind of that
Oh,
golden number.
25
Yeah,
is a golden number.
25.
Okay.
Yeah.
I'm glad I asked. Okay. So 25. So at the time, 2019, you're a decade away from the magic number of 25.
Yeah,
And
roughly.
you have
Yeah.
this roughly, you have this realization that you are kind of single threaded. You're in Hawaii. Do you already have that commercial building at this point? Well, I don't know when you locked that one up or you got that.
So we can dig into that later. That was a tricky one. It was more of a family.
Oh, okay.
My grandfather passed away, and there was possibly some maybe embezzlement of,
Mm.
so the rest of the family wanted to kind of just be done with it. So my mom wanted to keep it. So me, my brother, myself, and my mom, we did purchase it from the family.
Okay.
So that was around 2012 actually. But
Oh, okay.
I didn't want that thing. I was like, I don't want to. I don't know
Thank you.
what I'm doing, and but now I look back and I'm like, oh yeah, good job, Mom. I'm like, thanks for doing it.
Shout out, Mom. Buy and hold,
Yeah,
buy and hold, buy and hold
yeah.
works. Inflation's a feature, not a bug. Okay. So now 2019, you have this realization. I'm going to assume Hawaii's always been expensive. Did you even look at Hawaii? I mean, did you even give it a gander and create a buy box and do some research, or was it always, I got to go somewhere else?
I think because I already had that condo, and I looked at like how long I held it and had it, I was like, it takes forever to
Mhm.
cash flow. Like it's gonna take me this much, maybe down payment, and how long I'm gonna pay down the mortgage. It's gonna be, 10 to 15 years where I can maybe even break even.
Mhm.
So that's already from that point, it was kind of just had me looking
I'm
out of
out.
state. Yeah.
Yeah. Yeah. I think there's a lot of people who live in high cost areas, yourself, myself, that the math says you have to go somewhere else. So, okay. So you come to that realization you can't do it in your backyard. Tell us the story about why Pittsburgh. That seems, as an outsider, completely random. I mean, Pittsburgh to, Hawaii, that's kind of different.
Yeah, so for me, my friend who also lives in Honolulu, Hawaii, was investing in Pittsburgh already. So that's kind of why it got me looking into that market specifically. I mean, of course, I did what everyone else did. I'm looking at like 10 different things at first. I'm like, ooh, I like this one because the cash flow is the greatest. I like this one because it has a little better appreciation, or I like this one because the taxes are lower. So yeah, I was looking everywhere, and you come across all these great markets and you're just like, oh, I like this one, I like this one.
Mhm.
And you always talk about it too. I think having boots on the ground though is the most important thing. And that's what made me feel the most comfortable going with Pittsburgh, because my friend was already investing there.
That is that is the nugget that I hope comes across. And again, folks, don't forget, just like all school sessions, you can raise your hand, you could put comments in the comments. We will get to your questions. The goal in this session is for all of you to get your value out. I will riff for 10 or 15 minutes, and then hopefully you can raise your hand or put comments in, and we'll get to that in a minute. But you just pointed out the biggest thing in my opinion, going out of state, boots on the ground. And it really goes back not only to boots on the ground, but you have to have a connection to somebody that's already doing it. And oh, by the way, hopefully doing it for years, right? Not, oh, by the way, he bought one 3 weeks before I did. That's not helpful. So tell us about your friend's experience. I mean, you don't have to get, very detailed, but how long has he been doing it? How long was he there before you said, hey, let me look over your shoulder?
Yeah, so he was probably doing it about maybe 2, 3 years before me. But the biggest thing, and he probably doesn't like me saying this, is that he made a lot of mistakes.
Yeah,
So I
there you
I
go.
felt
Yeah.
yeah, I felt comfortable, like, okay, he made all these mistakes. Now I can piggyback off of what he's doing, and I can hopefully skip a lot of these mistakes that he made. And I think that's another thing I like to stress, is that we all make mistakes, but we want to jump on other people or piggyback other people's
Mhm.
systems to help lessen the burden of what might happen, right? And so he made a lot of mistakes. So I did jump in that area, and yeah, I've made my mistakes, and then like some other people that have followed me, their transition has been a lot smoother than my friends and myself.
This is why. And again, when we talk about going out of state, finding boots on the ground or that friend or connection, maybe some people just naturally think they're going to have it all wired. To your point, they're not. It was new to them too, right? He lived in Hawaii, invested in Pittsburgh, so he's going to pick the wrong PM. He's going to pick the wrong agents. He's going to buy on the wrong street. He's going to make all of the mistakes. But when you get connected with them, there'll be less. You'll make your own. Don't get me wrong. Uh, but you're also going to have a sounding board, right? Hey, dude, I got this one. I got this thing, blah, blah, blah. Can you help? Do you know someone? You just have to have that person kind of arm in arm with you, right?
Oh, of course, yeah. It makes it a lot easier. And like you said, it's just a sounding board, just like the school community. You can find someone doing something in your market or has more expertise, I guess, maybe in that field, and you can just bounce ideas off of. So, yeah, I think that's the greatest thing with having these communities, or having other people investing in that same market, is you just have more resources.
Yeah, I love that. Well, we're going to go to our first question. I always go to the brave ones who raise their hand. So, Catherine, we're going to unmute you, I think, and you will be the first question. Yep, there she goes.
Good morning, Michael. Good morning, Mark. How are you and how is everyone? Um, Mark, you just touched on something that resonated. You said that you had looked in many markets and that you picked Pittsburgh because you had boots on the ground because you knew people there. And I've heard that said before by many people, many of the millionaires on the show. And begs the question for me, which is we've looked at a couple of markets, really only two, because on this show, we've learned, well, you need to pick a market that you have familiarity with. And for us, those markets would be Florida, St. Louis, or Las Vegas, which are not areas that we live in. The area we live in, we would not invest in because it's not landlord friendly. So Vegas, St. Louis, or Florida. Florida, we ruled out because of the insurance costs, etc. Vegas doesn't cash flow really well. And St. Louis is a real contender, but we don't have boots on the ground. So I'm just wondering, I remember Millennial Mike and Dion talking about sort of this, reaching out to like you guys and, sort of pick, maybe, friending you or whatever on your social and following you and maybe piggybacking off of your boots on the ground. Is that something you recommend?
Yeah, absolutely. I mean, I think that's the one thing that I've really noticed about maybe real estate in general is this community is everyone is trying to help everyone. I think everyone is willing to talk about what they're doing and share what they're doing.
Yeah.
And no, I mean, maybe some people are fortunate enough to, but I don't think anyone ever has all the capital to take advantage of every deal that comes across their table. And I think a lot of people just like talking about real estate so people know what they're doing. And so yeah, if you message someone, myself,
Mhm.
like say Millennial Mike or anyone that you see that might be in a market that you're investing in, I almost certain that they'll reach out at some point and they're willing
Mm.
to, chat over Zoom or talk story about what they're doing. And I think even Frank, he might have a property in St. Louis. I think he's doing the out of state thing, but he's also in multiple markets.
Mm.
So he's also a good resource for someone if you did want to spread out. I mean, I think it's kind of challenging, but Frank's getting it done. But he's someone you could contact or connect with and see what he's doing over there.
Yeah, Catherine, one of the things that I would recommend doing is both in the school community and the Facebook group for one rental at a time is I would send out an introductory note, hi, Catherine, my husband's, forgive me, I forget his name. We're potentially looking to dig into St. Louis. Anyone out here in the group invest there, love to have a conversation. I think you'd be shocked at how many people reply and say, love to help, love to get connected.
Cool. Thank you so much, both of you. Appreciate it.
Yeah, of course. Of course. Again, folks, remember you can raise your hand. We will allow you to ask your question. But let me go check it. Chat. What do we got in the chat? Uh, Marc, question for you. Did the fellow investor provide the right neighborhoods to look in? Like, did he help you organize a buy box and all of that?
Well, he helped me form a buy box in a sense where he was investing in properties I didn't want to.
He was telling
So,
you where not to go.
well, I wouldn't, well, yes and no. So, what actually got me started or even interested in Pittsburgh was the things he was showing me at first
Mm.
was like $50,000 homes. And he's like, oh, they're $50,000, they rent for 900. So I was like, oh, wow, this is amazing. So I started looking into these properties. And the more I started talking to other people in the communities, like, even the insurance agents, even the property manager that he was using, they were like, yeah, he's doing well, he's cash flowing well, but
But
these are areas that I probably wouldn't want to walk in at night, right? And
yeah.
so that kind of had me already pivoting to a
Okay.
different price point. And then
Sure.
he actually followed suit after that. So he kind of got rid of, those cheaper homes that he was
Sure.
cash flowing well on. And then he started transitioning into better neighborhoods and better properties.
Gotcha. Gotcha. Santiago, we'll come to you for your question in a minute. We've got two more in the comments. We'll go there first and then go to you, Santiago. Somebody says we got to hear about the condo. Is that just hey, you lived there for a while, you moved out, bought a house, you flipped it to a rental, or is there a bigger story than that?
I so I always joke about too, like because of my pension, the condo I was just headed straight for working my 25, 30 years and retiring and just coasting along. And I I joke about it, like reading books, reading real estate. I never did any of that after I graduated college.
Right.
But now I'm listening to podcasts and all these things. But yeah, so the condo was kind of the starter.
Hmm.
And I had a son, and fortunately was able to transition into a single family home at some
Got it.
point. But was able to keep it, and was able to rent it out, and
Yeah.
minimally cash flow because of like HOAs and things like that.
Mm,
But then as I got into this out of state journey, that's what made me transition to a 1031 out of the condo into
got it.
properties in Pittsburgh. And that's another
So you've
mistake I made.
1031 out of it.
Yes, and I would do things a lot differently in that situation again.
Yeah.
Yeah.
I like it. I like it. Well, we got to send you a big congratulations, Mark. Looks like you reached 500 subs on YouTube. Can you talk about what you learned in your experience as you've eclipsed that important mark?
It's a lot of fun. I have a lot of fun, but it is a lot of work. And thank you for all of you that have subscribed. It's a lot of fun, and I hope you're getting a lot of good content out of it and a lot of good laughs. But it is a lot of work, and I admire, like what I can't imagine how many videos, like you said, you've put out, and you do it daily, consistently. Like these Zooms start at you say
Yeah.
6 a.m. They start at 6 a.m. and you're so consistent with it. And I think that's the thing, though. You just got to find your voice. I think it's
Yes.
the first maybe 25 or 50, you're kind of just navigating, feeling what works for you. Like for me, I really like doing the lives now, so I have kind of a group of people that we kind of do weekly lives, maybe
I
about two
see that.
lives a week. And I think I also like it too, because I think it's less work on making content overall.
Yeah.
It makes it easy. I do these lives, and I can just cut content out of that.
Yep.
But so I enjoy that, and I just actually enjoy meeting a lot of different people, and I kind of joke about it. But anyone here that's thinking about starting a channel or whatnot, and you want to make content, reach out to me. I joke that my channel is not very big, but it's a good way to test out your camera, your
Yeah.
lighting. Come on my channel, just talk, and you can get comfortable.
Yeah, I love that. You're such a go-giver. I love everything about what you're doing. Keep it up. The first 500, that's the hardest part. So you've eclipsed the hard part. It does, the momentum builds from here. So my congratulations to you, Mark. That's job well done. All right, Santiago, your hand is up. There you go. Floor is yours.
Morning, good morning, afternoon for some people. All right, so yeah, so this is my question, right? So I understand it's probably best to have boots on the ground when you're investing out of state, right? There's two markets that I'm currently in. I'm in the Jersey market because I lived there most of my life, and I recently moved to Florida, so I have family here that was my boots in the ground when I started investing here. Both markets are not that appealing at this point. They're high income, at least for myself. They're high end, high income markets. So I'm looking to expand my portfolio to other states and cities. Is there any advice you would have if you don't have boots in the ground? I guess one of the pieces of advice that I just picked up, maybe just throw it in the chat, see who's around, and get some information from other people. But anything else you would say for somebody that's looking to expand? Is there a price range that makes more sense for somebody like myself, a population area, things of that nature that Mark or
Mark, I'll let you go first so I don't dominate. But Mark, what are your thoughts on a question like this?
Well, I think, maybe before you really start looking out of state, it's kind of, you're in these two markets already, and, you're having fairly some success, hopefully, that, you kind of maybe double down on that. So like, I think there's like we talk about millennial Mike a lot of times, like no one would ever thought about investing in Gary, but he's making it work, right? And I think that's what a lot of people, sometimes they get into a market and they go, I'm going to pivot to this other market and try to find something better. But a lot of times it might be better just focusing where you're at, and build on those relationships, because every market someone's making money there, and a lot of it after a while comes down to you just make the deals better because of your connections there. You might get better terms. You might find more distressed properties. So like even Pittsburgh, sometimes in the beginning I was thinking, oh, maybe I want to get a different market, but it's like so hard to build these relationships, and you kind of build these connections, that I think sometimes it might be better to focus where you're at and just kind of mm, you know make these deals better in a sense. Like I said, you might find more distressed properties or whatnot, or find people that are bringing you wholesale deals. So I think that might be another way to look at it.
Yeah. So I get this question a dozen times a week in various forms. So the first thing I generally recommend, because again, a lot of people live in expensive markets and it's not working. It could be California, it could be, Miami, it could be, whatever it is. I think Dion is the most recent example of this. Sometimes if you just get in your car and you drive a half hour away or 45 minutes away, I think a lot of people are shocked what you can find in these tertiary cities. Olivia and I's example is a little extreme. We had to go 2.5 hours away. So I believe, my opinion, a lot of people they look at out of state because it's 30% price points of where they live. That doesn't mean anything. That doesn't mean it's a good deal. I've seen lots of people go broke buying cheap. So I guess the first thing I generally tell people is, pull out a map like Olivia and I did in 2001. And what cities are around us that we know nothing about? For us, we wanted a city that was over 500,000 people. So that was big cities. But I mean, Lumberjack tells us you can make it work 50,000. So I think a lot of people lean to out of state just because of the numbers. And to Mark's point, maybe you owe yourself at least a look at other cities around where you're living. So that's my first thought. Second, undoubtedly, people are making out of state investing work. And Mark's absolutely right. I mean, there's somebody making money in every city. But I don't believe this notion of the best city. I've seen all the CNN money and all these other kind of reports talking about the best cities. They change them all the time. I think lots of people lose money in best cities because they're chasing. You've got to find, if it's not boots on the ground, it's got to be, to your point, Santiago, it's like, do I know someone who's already successful there? Right. And ideally, if I know several someones, you have some security blanket. As Mark said, and I'll say, you're still going to make your own mistakes, but you want to shortcut that as much as possible. So I'll stop there, and Santiago, see if there's any follow-ups for Mark or I.
No, that makes a lot of sense. It's kind of what I'm trying to do. I'm having a little bit of difficulty, so that's why I wanted to kind of expand. But in Jersey, I'd rather not have the winter component of it, the snow
Sure.
removal.
So that's a no-go. Just got it off the
Right.
list.
And here I live in Miami, but I rent here. But I have properties further north.
Right.
And I'm thinking of just looking a little bit further north than that, right? A little bit up further up than Orlando, maybe a little bit, Jacksonville.
Yeah, I think you owe yourself that. I really do. I think too many people hear Mark's story, hear Millennial Mike, and they go, I want some of that. It's not for everybody.
Yeah. The other thing too was that I'm gonna have some more limited income. So so there's a lot of changes happening in my life, but I'm gonna have more limited income coming up.
Sure.
To invest. So I'm not gonna be able to make that $200,000 down payment anymore. Sure. You know what I mean? So that's why also my idea was, in other states, I can maybe afford to make that buy a couple of $50,000 down payments here and there,
So again, if you're going to go to a market where, and again, there's lots of them, and there's lots of people in my groups that are doing that, you could still go broke buying 50K.
Yeah.
Right. You get a couple of the wrong tenants, you're in the wrong side of town, the city goes wonky.
Yeah.
I've heard the horror stories. I mean, I don't know if Santiago, you've heard me say this, but if you've been with me for 3 years, you've heard the following quote. I had multiple friends in the Silicon Valley tell me the house costs less than my Tesla. I'm like, why does that make it a good deal? That just means you got an expensive car. So, I mean, it can work. It does work it's just not as easy as I think some people make it look.
Yeah. Okay. Yeah. No, good stuff. Good stuff. Thanks.
Very cool. Thanks, Santiago. All right, we're going to go to the comments because I think that came in just before Kevin raised his hands. John, this is really a comment, but I want to echo it. It is absolutely my hope, and so far I've been proven correct, the folks that get attracted to one rental at a time are naturally go-givers. They believe in doing the work. They believe in asking questions, but they also believe in answering questions. So yeah, it is absolutely my hope, John, that if somebody comes around in a year or two, as we keep the party going, you're a resource for them in this area or that area. It's probably one of the most happiest things I have about having this group, channel, family, whatever you want to call it, is we all help each other, or at least we all try to help each other. So yes, that is my hope. All right, we're going to Kevin next for his question.
Hey, Mark, what's going on, man? Sounds like you and I are walking down the same path because I currently work for a local government position that's pensionable, Air National Guard, so on and so forth. And I'm the gentleman that just got back from Biloxi that purchased that condo, renovated it, and we're focusing on short-term renting to the military. I'm just curious, you touched on some mistakes, and I'm brand new. I'm just kind of like, this feels right, kind of the direction that I'm going in. But is there something that I should be looking out for as far as potentially mistakes that I have made, or where I could end up going?
Yeah, so I'm not sure how much you know of my story, but kind of my claim to fame, or what Dion likes to bring up a lot of times, is so I went all in. I emptied out my retirement accounts. I realized I thought real estate was the path, and I still do, and I'm glad I did it. But I definitely, that whole saying, slow is smooth and smooth is fast, and I definitely got kind of tricked in the beginning, where maybe the first few properties were very easy, very hands off. And I said, "Oh, this is easy. I don't know what these guys are talking about. Like, real estate is hard." And so I went all in, and I probably got like 10 properties in maybe a 2-3 month span. And I didn't, like some Santiago was talking about the temperatures of the weather, in the east. So Pittsburgh, the winter time, it was a lot more vacancies when I closed on these properties than I thought. It took a lot longer to find tenants. And then of course, there's issues that come along when you're trying to stabilize these properties, maybe an HVAC or whatnot. So yeah, it's I would definitely, go slow, take your time, let things stabilize. Don't get, even if you are having success, be cautious on going too fast and trying to scale too quickly. And if you are going to do the whole retirement account things, be more strategic about it. I'm glad I did it, but I definitely could have been more strategic in how I access those funds.
I think there's a lot of wisdom in there, Kevin, and I've seen a lot of people, because they have dry powder for whatever, whether it's stock money, 401k money, whatever, they feel like it's burning a hole in their pocket, and they go too fast. That is almost always a recipe for pain, right? At a minimum, it's going to be lessons learned, as Mark's case, but in some unfortunate situations, it could blow up the entire portfolio. So realize you're on a journey. The journey takes time for everyone. The first 5 years are slower than we all like. But take care, keep looking, keep networking. And, I like where you're at.
Thanks, guys. I really appreciate the input.
Yeah, very cool. Very cool. Thanks, Kevin. All right, let's keep going. Let's get a question from Jen. With regards to your real estate investing journey, can you talk about any regrets, anything you would have done differently knowing what you know now? All right, Marc, let's go.
Wow, where do I start on this? I mean, we talked about the pulling out the retirement account. I mean, like the cliche, I wish I started earlier. I wish, I thought about multiple streams of income when I was younger. I think for me, I don't talk about it too much, but so the 1031, I wouldn't say it was a mistake. I just definitely would have done a lot of things differently. So I mean, I guess I somewhat scaled up. I went from a condo to, 4 to 5 single family homes. So I guess in some way I did scale up. I think if I was to do it again, I would have just gone bigger, directly into a bigger or like a smaller multifamily type unit. I do believe I talked myself out of it. So I think that's why it's great to be in these communities. You have more sounding boards, and kind of you could go over different scenarios. But how I did the 1031, or what I sold into, I think that would have been what I would have changed a lot differently. And even looking at, maybe I would have kept it, just from it. What I'm noticing is that I'm having a harder time accessing capital in these out of state investments, and especially the way the economy and banking is. a lot of people are not giving you access to this capital or at a very high rate. So possibly keeping that condo where I live, it would allow me to access that capital a lot easier because I live here and the property's here. So that's a couple of things I would have done differently.
Kind of a follow-up question from Jen. I actually don't know the answer to this. When you were buying in Pittsburgh and you bought 10 properties in a couple of months, were these just all straight MLS? Were you getting wholesale deals? Where did you find the deals that you said yes to?
Yeah, these are all straight kind of MLS. I wouldn't say they're turnkey. I would say they're rent ready, maybe minor cosmetic type rehab needed, but all rent ready things, all cash flowing day one. So all solid base hits. But that's another thing too. I think if I went slower, it would have allowed me to get better deals. Instead of
Mm,
getting maybe 14 base hits, I would have got
right.
maybe 4 base hits in the beginning, kind of learn, let things stabilize, kind of learn the process. And then the next, I think I would have exploded in a sense where I would have got, maybe these Burr type of properties where you're buying, below market value and then doing some rehabs. And then, so I think if I went slower, I would have actually scaled
I
a lot
th
quicker
I
after.
think that is such wise advice, and I'm glad we got there. One of the reasons not to go fast in the beginning is not only the pain and all the stress that comes, but you don't even know what you don't know yet, right? You may be doing a deal that you think's a great deal that it turns out to just be marginal because you got some calculation wrong, right? When you get into this and you've held an asset for a year and a half, you have a full cycle, your numbers just get better. You get better as an investor. And I can guarantee you, Mark, if you would have slowed down, your fifth deal would have been better than your first. Your sixth would have been better than your second. I guarantee you. So that's very wise words. All right. The next thing that came up, I believe, was Troy. Troy, your hands up, buddy. Go ahead.
Good morning, guys. I got
Hey.
on here a little bit late, so I missed the first 20 minutes or so of it. Um, I don't know if this is directly a message for Mark in general, but it's for you, Zub, and
Mm-hmm.
you both. So with the way the economy is going, I'm looking at purchasing a commercial residential property, 5 plus,
Mm-hmm.
in Kansas City, Missouri. That's
Okay.
my market. I got a duplex I just purchased there in January.
Mm-hmm.
And just for all the rest of you guys, you think everything's going to be rent ready, but I'm actually replacing the third toilet out of 4 in this duplex.
Wow.
And I
Okay.
purchased the property in January. So you know what? On top of that, the hot water heaters. So you think everything's good. So, but just be prepared that you're going
Yep.
to be replacing a lot of stuff more than you anticipate for. And
Mm-hmm.
actually, that cash flow is absolutely crucial if you don't have it. So
Mm-hmm.
we're cash flowing about 900 a month on it, but it's we've had to do a lot of upgrades, and so we
Sure.
don't have a lot of reserves quite yet. But when that starts getting stabilized, it'll start building.
Yep.
My question is looking at. So I've been looking at a lot of multifamily properties on LoopNet, on
Mm-hmm.
Kretzy,
Yep.
and even through Facebook groups and stuff like that. And a lot of the stuff that is being listed, they're asking way more than they're worth.
Yeah.
They're basing it off of their performas that are nice and grandiose, and
Mm-hmm.
oh, this is what it's going to produce. But you get their T12s and stuff like that, and you're
Yep.
like, well, your NOI is like half of what you're stating.
Yep.
Going forward, how are you approaching properties like this to try to maybe negotiate a deal? Because I'm a part of multifamily strategies with Cody and Christian as well.
Yeah.
But what I'm looking at is some of these properties, their balloons are coming up. Like one's coming
Yeah.
up that I looked at just the other day that's coming up in 2026. Another one's
Yeah.
coming up in like the end of 2026. Another one's 2027. There's some that are like 2025, and there's not a lot of equity in the deal.
Oh, there's no
So
equity. So this is exactly what I see coming. And this is why I am personally so excited. There are a lot of deals that have been done, 5 to 500 units by syndicators who were nothing more than financial engineers. They overpaid, they try to value add, the music stopped, they're going to lose all their equity, and probably the debt's going to take a haircut. I would not jump in front of any of these balloons. What's going to likely happen, because again, I've been here before, 2011, 12, 13, we bought a bunch of multifamily from busted owners who overpaid in the previous cycle. You're going to end up dealing directly with the lenders. Even if it's not
Oh, okay.
foreclosed, you're going to end up
That's what I was
dealing.
wondering.
You're going to end up dealing directly with the lenders because what's going to
So is it
happen?
gonna be like an REO?
Well, again, it doesn't necessarily have to go full REO to deal
Mhm.
directly with the lender, but they can force a sell. So let me just tell you what's happening. Step one, owner of a property has a balloon coming. The bank, they do their, because I don't know if you guys know this, but every year on every commercial loan I have, and I have a lot, I have to go to the bank and show them my financial statement. They give a thumbs up, thumbs down, all that stuff. So what's happening is these owners of these properties are being told by their banks that their DSCR is busted, their collateral is wasted, and they should look at selling. So what do? They list the property at a stupid number. Why? Because they want to get out without losing anything. But as you've already said, cap rates have gone up, NOI has gone down. They're hoping for some miracle. It's not coming. The bank's going to give them 6 months, give them 9 months, maybe give them a full year, this whole extend and pretend thing. But eventually the bank's going to have a problem. And trust me, this is coming. What is going to happen with that building? So I list the property as an owner. I already know I can't refi it. I can't cash in refi. So what's going to happen over the next 6, 9, or 12 months is the bank and the seller hope for a miracle. You are not going to do 1 penny of an improvement. You are going to try to bleed that property dry. And at the end of that year, the asset's going to be worth even less. And then the bank's going to have a real problem and the seller's going to have a problem. So again, this is coming. And I have been here before. The greatest story I have for you is there was a building, 18 units listed for 1.44 million back in 2010 or 11. Why 1.44 million? Because that's what the owner paid when he bought it in 2008. The debt blew up. He couldn't sell. The bank gave him basically 2 years to figure it out. He couldn't. They foreclosed. We bought it directly from the bank for 700. Why? Because the seller did nothing for 2 years. So don't jump in front of one of these notes. There's a lot of people getting too excited. Folks, we are so early. This is like, I'm not even sure we're done with batting practice, right? I'm not even sure we're in the first inning. So the fact you're doing the work, LoopNet, Prexy, the job I would be doing today in Kansas City is I would look up the top 100 community banks. I would look up the top 100 small banks. And I would try to go meet them. And because you got to get on the preferred list. Right now, we got a lot of people hoping to sell for stupid prices. Don't be that person. The seller has no reason to say yes. Like they bought it for $1 million. It's really worth 700. The debt's at 800. They're not going to entertain a 700 because that means they lose all their equity. They'll never be able to be a part of a syndication again. They're just going to hope and pray. So, dude, we're in batting practice. We haven't started the game yet. So build your network.
So do you suggest, so I'm out of state. So
Sure.
I actually met you at the Northwest Action Summit and you signed,
Oh, cool.
You and your wife signed the book for me.
Oh, nice.
But do you suggest just contacting those banks and just establishing a relationship with them?
Grow your network. Meet 2 new people a week. Meeting on the phone's fine. You could even do Zoom calls. I think they'll take a phone call first. I would create a credibility package, right? Who you are, what you're doing, why Kansas City. I would make the deck sizzle so they know you're serious. And yeah, I would.
Perfect.
My goal for if I was you is I want to be the top 5 buyers on 10 banks. I want them to have my name, and because what's going to happen is they're going to call their friends and family and go, okay, we got to let go of 123 Main Street. The debt is X, blah, 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 so yeah, this part of the cycle is about meeting as many people as you can.
All right, perfect. And then with those properties that, are just sitting on the market, just keep a tab on those as things progress.
Yeah. I mean, always, you always are doing the work. It's going to take a long
time before they get foreclosed on. I mean,
before they get
like
serious.
2026, 2027 at this point, probably.
Yeah, I mean, if you want to have fun, if you just want to, if you want to, test your chops at writing deals, write a disrespectful offer. I mean, the worst thing they could say is no.
No, yeah, exactly.
But get better at it because you're going to, again, I'm just making these numbers up. The property's listed at 1.1. You write it for 650. The agent's going to call you back going, what the hell? You're a loser, blah, blah, blah. But then you're going to defend your 650. Well, if you look at the numbers and you look at the actuals and blah, 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 You're just going to use that as practice.
All right, perfect. I like that. Thanks, Mike.
No worries. All right, Rick, this question for you, Mark, from Rick. Do you self-manage your out-of-state properties, or do you have a property manager? If property manager, what is the largest challenge with property managers? All right, Mark.
So I traditionally started with a property management company. So that's how I first got started. As I started getting comfortable, making more connections, learning how things work, I'm somewhat self-managing 5 properties, kind of a hybrid style, because I wanted to kind of see like a proof of concept, and if it is possible, and just make content and help other people and see if it can be done.
Very cool.
So I'm kind of doing like a hybrid style with Hemlane, and a boots on the ground property management company. So I kind of use Hemlane as the bridge with the tenants for like communication, rent collection. They do submit maintenance through there. However, I use a property management company that I kind of just outsource the maintenance through them. So I just notify them, oh, whatever, this tenant, put in a request. So I'm building a relationship with that company, because they also have a brokerage side and a contracting side, a construction side. So building a relationship with them. But as far as, those 5, I am kind of self-managing,
How long you been doing that?
Probably about a year, just up on a year
Oh,
now,
wow.
for the
Okay.
self-managing, that hybrid
Sure.
style. Yeah. Hemlane is amazing. It's very easy, user friendly. The prices are going up a little bit slightly, so I think there's kind of a cutoff point where, if your properties, maybe the rent collection is only about 1,000 a month or so. I'm not sure if using Hemlane, the full service package, is going to make sense. It might just, it's almost going to be the same cost of getting a traditional property manager. So that's what I would say.
Very cool. Very cool. All right, we're going to go to the next hand, and then we'll go to Kevin's follow-up question. Trade Better 99's up.
Hey, thanks for having me. Very excited. Yeah, my question was that, Mark, you've talked about the lessons you've learned and everything. With the properties that you bought now, self-managing, what's your unexpected superpower that you found in yourself that you could take to the next deal?
Well, my man Trade Better used to be Trade Better 20. So I don't know if Zuber's heard this story, but he used to go by Trade Better 20, and he wanted to be number 100 in the school community, and he fell one short. So he's become Trade Better 99.
I did not know that. I'm so
Yeah.
sorry.
But
No,
if
it's
anyone
okay.
wants to hear his story, I just interviewed him, so it's on my channel. So he has an amazing
nice.
story. So go check it out. But yeah, on my superpower, and I kind of joke about it quite a bit, and I think maybe it's a first responder thing, and Millennial Mike talks about it quite a bit. Is I think that we are, handling anxiety or stress, and kind of realizing that things are not always going to go the way we plan and hope for, and we just have to be able to figure out a solution and be willing to pivot. And I think that's what a lot of people struggle with, and that's another thing about out-of-state investing. I think you really have to understand your personality or yourself, because like Zuber talked about, the numbers may make sense and it may work for a lot of people, but if you're someone that has to be hands-on or be able to touch your property, it's not going to work for you. And I think that's super important. Is you may have to take smaller returns, where if the you're going to rent, you're going to invest in your backyard, but that's going to allow you to sleep well at night. So, but for me, I think it's really just being able to handle the anxiety and the stress and problems that do come up, and realize that someone has gone through this. There's a solution out there, right? And you just have to either find these people that have done it, or at the end of the day, you just have to make a decision. And if it is somewhat of a wrong decision, hopefully you learn from it and you don't make that decision the next time this problem comes up.
Yeah, that's one of the reasons by being around a group of multiple people trying things is just going to short circuit that. And I think that's a tremendous superpower, to almost be emotionally disengaged. Because I would tell you, again, I've been helping, new investors for a long time. A lot of them, they wrap themselves up in a pretty tight knot. So that's a tremendous superpower to have. So that's a great question. Trade Better. And Trade Better's first name is?
Harrison.
Tell him. Harrison. Thank you, Harrison.
Yeah, Harrison.
I didn't
Yeah,
feel
thanks so
I didn't
much.
feel right calling you trade better. Harrison. Thank you, buddy.
Don't worry about it. Thank you.
All right. I appreciate it. All right. Back to you. Kevin's questions up next. I don't see any hands raised, so I'll just start making up questions if nobody else has a question. Is there anything we need to pay attention to with taxes state by state? That is not a dumb question. I think I know the answer to that, but since I don't have out of state, I'll see what Mark has to say.
Yeah, that's kind of the thing that sneaks up on people, I think. They don't realize and they don't follow the taxes as much. And they don't even, so even like Pittsburgh or Pennsylvania, there's like the school tax, there's like boroughs, and sometimes it varies, and it's so hard to get like a exact amount. And the other thing too, and I didn't realize, and maybe that's why I'm staying in Pittsburgh, is Pennsylvania has a very high transfer title fee. And so I went down, I got scared by the boogeyman. I went down the whole LLC, set up your structure route. And now just to even, if I wanted to take the property out of my name, for financing purposes or whatnot, I'd be paying, don't quote me, but I think it's about 5% total for the transfer title fee on the properties. So I think Pennsylvania is like the highest in the country. So those are the things that knowing other investors or being around these other people, is super helpful. So I think even, I don't know if he's here, but like Dennis, he's in South Carolina, and that's a market that I was looking at in the beginning also too. And it came across that they have a higher tax rate for, I think, outside investors or investors in general. So a lot of times you
homestead
look
versus not homestead. Yep.
Yeah, and then you look at it and it cash flows, and then when you finally get the tax, and it's like, oh, there went all my cash flow.
Yeah.
So yeah, there's something. It's very good to be around other people that are, like you said, years ahead of you that have this experience with that.
Yeah. Well, the other thing we talk about taxes, so that's all good property management. I thought the question might actually be income taxes. Right. So obviously I work with Bob Langworthy. So let's talk about income taxes. So every year you're filing, you own property in Pennsylvania. You've got to do something.
Yeah. So it's filed, but you have that out of state. I can't even think of the name right now. But it's on your tax return. You're filing. Yeah, but then it's like
it's extra paperwork. Yeah. So you have to file in the state with that, and then that becomes a credit on your whatever it is, whatever your W-2 or whatever that tax is. But yeah, definitely more paperwork. Every state's going to get their piece.
Yeah.
Although you as the individual, it kind of nets out. But it is more taxes. Mark pays taxes, income taxes in Pennsylvania. Yeah. But it does come off his net. So yeah. Right, Mark? I didn't want to put words in your mouth.
No, yeah, exactly. And then like I said, even that whole LLC structure thing causes more paperwork and more headaches.
Yeah. This is from Jen. One of the biggest challenges for me is finding your team while so far away. Any stories you'd like to share, lessons learned, advice, new investors who are trying to go out of state? Talk about your superpower of building teams and networking.
You just gotta get out there and not be afraid of making an ass of yourself, in a sense, I guess. And that is another part of my superpower. I think I don't really worry about what other people think about me or what they say about me. And maybe that's because of in the firehouse, the joke is if you're not being teased, then they don't like you, right? So it's kind of
exactly
you got to build thick skin and be able to roll with things. But I think like we kind of touched on earlier, I think these communities are super helpful, but you realize after a while that there's so much people that are willing to talk about what they're doing and they want to share what they're doing. And I think everyone is trying to help everyone. But yeah, just put your story out there, just start talking to everyone. And like I said, if anyone wants to come on my channel, I think that's how you also get comfortable,
practice.
Right? You just get comfortable talking and you get used. And that's why the lives are really fun, because you kind of got to be just thinking, even when the questions come in, and you got to be ready to spit out an answer or have something on top of mind.
I love that. I mean, one of the things I would tell you, if you are uncomfortable kind of networking, getting out there, to your point, Mark, start a YouTube channel and go live. You will get hitting that go live button. That is a way to neutralize that feeling, because you're exposed, and it'll be uncomfortable. It'll feel weird. You'll stumble. You'll do this or that. But then you know what? You don't die. I promise you won't die. So just keep that going. So we probably have time for one or two more questions, either raised. Oh, we did have one more here. So again, you got probably time for one more after John. For us small fish, are you individual multifamily also batting practice, or is it a head 100 plus properties? I do see some properties. Oh, so this is more of a timing question, if I read it correctly. So I'll frame it this way for you, Mark. When you look at Pittsburgh, and if I were to ask you about single family homes, 2 through 4, and then 5 and above, do you have a feeling for how those 3 categories are performing in Pittsburgh?
Just kind of a real base general view
Sure.
on it. I think in general, Pittsburgh is very attractive. It's very affordable. I think just like anywhere, multifamily has picked up a lot of attraction because people are trying to house hack. So those properties are selling super quick. It's very hard to find those small multi-family type units because everyone is trying to do the house hack now and get into those properties. The maybe 5 units and above, I am seeing a decent amount on the market. The big thing though, and you have to the same thing as market by market, but Pittsburgh does have a lot of older properties, and so I think that's why a lot of people there's a lot of deferred maintenance on a lot of these structures, and that's what's kind of preventing a lot of people from getting into these properties because even capital for a lot of people getting financing for these properties is kind of hard right now.
Yeah.
So those properties are sitting a lot longer. And just like you touched on your news all the time, but like for the single family homes, below the median is still, super hot. The
Mhm.
one thing about Pittsburgh that is a little bit struggle, I guess, is the rents have been fairly flat recently.
Oh, really? Okay.
Yeah, because the housing is still so affordable that people are still buying homes, so like
Mm.
primary
All right.
residences.
That's good.
So from an investment standpoint, a lot of the rental numbers are kind of lagging in a sense because people are still buying homes to live in.
Yeah, I love that. I love that. So if I were to kind of summarize this, I think it was John, right? Let me scroll up. Yeah. So yeah, I think batting practice for the 5 to 50, kind of the multifamily, definitely batting practice. The 2 through 4s, I think in most market, to Mark's point, is the hottest. I think the notion, I think Bigger Pockets, I think YouTube University, I think my channel with all the other millionaires who've done it, I think it's really highlighting that house hacking is the best way to get on the property ladder. So I would agree with that. I think the hardest thing to find today is a great fourplex. That's what I think today, a great fourplex. And then single family homes, I think Mark nailed it. I think if you're lucky enough to be shopping for a luxury property like Manhattan, the top 10% of the market is taking a huge haircut, which will distort the numbers. But yeah, so that's kind of what I see kind of in order of operation. I think we got time for one more. It's going to be Mickey. Hopefully I'm pronouncing that correct. You are a great networker. She's talking about you, Mark, just so you know, so you can smile. At the Aura event, saw it in person. What advice do you have for reaching out to people in your market so far away in Hawaii? How do you do that? Any advice? I mean, that's 6 hours time zone difference.
Well, that's part of the reason why I get up early too. I mean, I started noticing that a lot of times, like maybe if I always got up early to work out and things, but a lot of times like maybe someone would email me, and by the time I notice it, then it's like the end of the day for them.
Yeah.
Then I email them, they're gone, and then they email me
Right.
back, but I'm sleeping or whatever, and then it's kind of this cycle. So I know Mikey takes a lot of naps, so he better start getting up earlier so that he can connect with people. He's also investing in Pittsburgh. But on his point too, for those of you that didn't make it to the ORAD event, I mean, that was like Zuber talks about, it was an amazing event, but it just felt like a family. It
Mhm.
didn't feel like any other real estate event that I went to, and people were just connecting, and there was just so much time to sit down and network. And I'm not saying not to pay attention, but I knew everything was going to be recorded. So I was more just walking around talking story. And, all the speakers too they didn't leave. Like I think you touched,
Mhm.
they didn't leave. They just hung around and they were sitting right next to you and you could talk
Yeah.
story with them. So yeah, it was super amazing. But I think the biggest thing, and that's kind of why I like the YouTube channel also, is because it gives me an excuse to connect with people in Pittsburgh
Hmm.
and say, hey, do you want to come on my channel? We can talk real estate, talk about what you're doing. And yeah,
Great.
they want to get their message out there, or if they're an agent or a property manager, they love talking about real estate.
Yeah. So it's really, again, I think Millennium Mike has kind of unlocked it. If you're gonna pick a market, Pittsburgh, Gary, Indiana, whatever it is, create a YouTube channel. Even if it's hundreds of subscribers, all you have to do is reach out to an agent. Like, let's just say you found the number one agent in Pittsburgh, maybe the number two. Let's say the number two. Maybe the number one's an arrogant prick. Number two, go to them and say, hey, I have a YouTube channel focused on Pittsburgh. I know, based on so and so search, you're number two. Why don't we come on the channel and see if I can help you become number one? Make it a win for them. They will always say yes, right? If you tell them you have something for that market. So if you're pot committed to St. Louis or, Dallas or any other market we've talked about today, you're doing yourself a disservice if you don't create a channel aimed at that, because it could be a tremendous networking tool. And then lastly, we'll say about the Vegas event before I go, because I do have a 10 o'clock call, is I agreed, I forget who asked, but somebody asked for me to put the Vegas event tickets on sale in school first. So I will do that. So right now I've already communicated publicly that tickets will go on sale August 1st. So sometime the last week of July, I will do all the stuff that I have to do, and I will release the tickets in school. I'm going to shoot for a week ahead of time. So all of you will get access. I won't mention it. I don't think I'll mention it anywhere, but maybe I'll use it like, hey, join school, get access early. I'll probably say that now that I think about it. But it will not be available for general public until August 1st. That's my commitment to this team. So guys, take care of yourself. Have fun. Have an amazing day. Mark, you're amazing. Go take your nap. Later.
Bye, everyone.